Eric Muade, Muade.com, with World Market Analysis for the weekend of June 20th and June 21st, 2015. Recording this with about 4 hours to go before the US market close. Let's take a look at how world markets closed across the globe. We'll begin by taking a look at Asia, which, as you can see here, was pretty much a mixed bag, but the biggest moving market was China, which was down an amazing 6.36%. So that's the biggest mover. We see that Japan was up 0.92, and the other markets were slightly unchanged. And we see that Australia was up about 1.31%. If we take a look at European markets, the biggest mover was German, down 0.54%. Otherwise, pretty much a slightly unchanged session on Friday. Take a look at the Americas, and we can see that as of right now, with a couple of hours trading, Brazil seems to be down about 1%. The other markets are also pointing down slightly, pretty much similar to what the US market is doing. Let's begin first by taking a look at the S&P 500 as of right now. With almost half a session to go on Friday, we see that right now we are looking at S&P 500 showing the potential for resistance on this declining RSI line. Even though it had a nice couple of days, it's come back to test this resistance here, and we'll cover this in part 1 of this weekend's US market analysis. But it looks like resistance in terms of the S&P 500 coming in contact with this resistance line. Let's begin by taking a look here at the Canadian market, the TSX. Right now, as we discussed last weekend, the possibility of this being a bearish situation because of the crossover between the 13-week moving average crossing below the 34-week moving average generally tends to be a bearish development, just like we had a bullish development here when we had a crossover between the 13 and the 34-week moving average. This time was a bullish crossover for a nice move, trending higher for a couple of years there. Now we are looking at this potential crossover, which might be bearish. Also, if we take a look at the Canadian market from a monthly view, we see that we've come back to test a major trend line on the monthly RSI. If we can hold above this line, that's good. Otherwise, a break of this line pretty much means the beginning of a fresh strong move lower. So it's a make or break situation in terms of that monthly chart. If we take a look at the Brazilian market, not much right now to determine what's going on, because we are trading between the 50-day moving average and the 200-day moving average. So we are stuck in this range, and trading between the moving averages really pretty much means that it is a period where the market has to decide which way it wants to go. Pretty much a sideways market, in my opinion, as far as the market is concerned right now. And let's go to Europe here. Begin by taking a look at the French market on the daily. We see we've been playing around with this support level on the daily RSI. Yes, the market has come off the highs, so this is a strong pullback. But now the question is, what next? As long as the market is holding on this RSI support line, where it's been holding over the last couple of bounces, for example, this uniform activity support above the line was this lows. We held above the line here during these lows, and we are coming here. If this is confirmed as support, then this could be enough to stem the recent pullback. Market could bounce. Otherwise, a break of that very easily identifiable line, a break of that line would suggest lower prices. So right now we're looking at potential for support unless we break. This is also similar type of observation if we go and take a look at the German market daily. On the German daily, we can see that it held support on this line here, and this line we drew because of this is where we began this nice move off the lows. So this slight RSI breakout here began this move that saw the market moving to fresh momentum highs here. So nice move, and every time the market's been coming back to this level, we've been seeing support. It held on the line there, short-term lows, came close to the line there, short-term lows, held here, which is the short-term lows, and now this has already held. So we are stuck as far as the German market is concerned. We seem to be having either resistance here when we are trying to move higher, and support every time the market's been coming down. So eventually we might determine the direction if we break out to the upside for a swing trade higher, or if we break below that line for a swing trade lower. Same observation can be seen also by taking a look at the FTSE, which is also showing the same type of situation here, where it needs to decide whether it's going to find support on this line connecting recent RSI lows. If that holds, that's good, so that needs to hold, and as of right now looks like double bottom support. If it holds, one can expect the market to recover. Also, we have this line of support here that it has been holding. So if it holds, then we have a chance of seeing the prices jump because the RSI has seen support there. Or if we break that support, then we are going to see an even steeper drop. Let's take a look at some Asian markets. We begin by taking a look at China, which was down 6.3%, which is not reflected on this chart. So we would say, can assume that now the price is somewhere here, which means that we've broken below this RSI line of support where it has been bouncing. Recently, you can see it's been coming back and showing support on this level for a nice bounce. And if we are breaking below that line of support, that would indicate that the daily chart seems to be indicating that there's a room for even more downside action. If we take a look at the weekly, we see that the weekly RSI, so let me see whether I can get that weekly chart here, shows that now the weekly RSI is trading below 69.1, which means that there is a possibility that now the market could easily be looking to correct. But let's watch that to see whether it can bounce back above 69.1. Keep in mind, it has been bouncing back above 69.1 on several occasions over the last, let's call it 1 year or so. Here it recovered back above 69.1 and also during these pullbacks here. So as long as it can bounce back above 69.1, it could still have a chance of moving higher. But for now, that's in question with this big drop on Friday of 6%. If it stays below 69.1, then maybe this market is starting to get the much needed rest after this very, very, very impressive run. So yes, it's been a leadership market in the world, and yes, it did have that correction this week. But does this mean that it can't recover? We'll see how the daily charts settle out in the coming days. If we take a look at the monthly continues still trading above 69.1 on the monthly RSI, and as long as that's the case, this market could still be strong. So anything above 69.1 on the monthly would still indicate that it has some residual strength despite the recent 2-day, 3-day pullback. Just like some of the European markets, we take a look here at the Hong Kong market, and we can see that it is recently coming back to test the line of support that we've been watching here after a recent pullback. And as long as it is holding above that line, just like we saw in Europe, then this should be a market that could bounce. Otherwise, the risk here is that the line of support fails. If this line of support fails, then one can expect this to go lower. Also, there's a line connecting recent RSI lows, connecting recent RSI daily lows on this price line. If this breaks, if those two lines break, one can expect an even deeper correction. For now, it looks like it could be stabilizing after recent pullback. We take a look at the KOSPI, the South Korean market, on the daily, and we can see that also it too needs to be holding support above this line here. If it can hold and move above this line with uniform action, something it's trying to do, also seems to be a back test of this breakout. You can see that once it broke out above, so let me show that. So once it moved up higher here for a nice move, it's come all the way back to test the same breakout line coming from this previous line. So it is holding and bouncing nicely back above that line. Indication there could be that it has a chance now to recover after recent pullbacks. The one thing I did note on the monthly for the South Korean market is it came back to this line of resistance on the monthly chart. This monthly chart goes back 2008. You can see that it has been a problem ever since this break which was here sometime in 2011. We've seen multiple resistance levels, and every time the market went into a multi-month pullback. So the monthly on this one doesn't look great because of this recent resistance. If we take a look at Japan, we can see that Japan did bounce on Friday, and so it is right now holding above the 50-day moving average, which is good. We also see that it came back and found support on this line that we've been watching, and this line began or is drawn because this is where the movement higher began off the lows recently. Here the market has gone on a very nice run from about 15,000 all the way to 20,000, and so this is where the move began here, and so we can draw a line, which is this blue line. Market's been coming here and showing support, as you can see, support here during these lows, support here on the line during these lows, support on the same line here, which was successful, and now we seem to be bouncing off the same line after Friday's move. So the Japanese market is showing support, and as long as it's showing support, it should be a healthy market for now. If we take a look at the Australian market, still trading around the 200-day moving average, and we have a very steep declining 50-day moving average. So indication there is that this market is not as strong. As you can see here, we have a steep declining 50-day moving average. We've been trading around and below the 200-day moving average after a recent pullback. So this is an area where market can gather strength and eventually either decide to go higher or break down. Seems like every time we come to this RSI line, we find resistance. Even with Friday's move higher, we are still below this line, and yet every time we try and sell off, we come back to this line of support. So obviously we are stuck in this range of resistance when the market moves higher and support when the market is pulling back. Eventually the next swing trade should come with either a breakout above that line for a nice swing trade higher, or a breakdown below that line of support for a stronger and deeper correction. The one thing traders should watch is that the Australian market is also back to a critical level. This line here needs to hold on the monthly, otherwise this line going back to 2008, if it breaks, I can assure you a break of that line could suggest and also imply that we are due for a major bear market correction. So that line needs to hold. If it doesn't hold, expect markets, at least the Australian market, to be dropping with a steep decline based on that break. If we take a look at the Nifty, we can see right now it's doing its best to hold support on the weekly chart. As you can see, this is a line we've been watching for either make or break, and we are back above this at the end of this past week. So which means that as long as this is holding and as long as this support is holding, one can expect this to recover. Unfortunately, if it cannot hold above that blue line of support, then this would suggest that this would actually be looking to go down. So yes, the much needed support in this past week's action, exactly what the bulls wanted to see. And if you're a bear, you'd like the market to stay below this blue line. So it's very simple here on how to look at this. Above the line, markets can bounce and recover. Otherwise, a break of this line, one can expect an even steeper correction. If we take a look at the daily for the Nifty, we can see that we have a crossover here that is bearish between the 50-day moving average crossing below the 200-day moving average. Sometimes that can be setting up for a severe pullback. Also, we can see that we are coming back to test the top side of this top side RSI resistance line. So this is where the market did close on Friday. That could be resistance, could suggest a pullback after a recent bounce. We'll see how that plays out. If we take a look at the hourly, we see that it is coming back. So this was the high here recently, and we can see that was a break. So that break level there generates a line we can use for future sell points, something like that. You can see the market did come here, test that line once before and failed, which was during this high. It came close to that line here, which was this short-term high, and as of Friday, this is seeming like resistance. Indication is that as long as this is resistance, one can expect prices to drop after a recent recovery. Let's take a look at one more South African stock market, and we can see right now it is doing its best to hold support on this line where it's been bouncing over the last couple of years. You can see all these lows and all these pullbacks did stop exactly on this line. So it's very easy to see that as long as this line holds, then the South African market should also be looking to bounce after a recent pullback. If it holds, good. Otherwise, a break of that line could be a problem. Let me share with you my concerns here is that if you take a look at the 3-year monthly chart, so 3 years, or in fact I'm using 34 months, you can see on the 34-month time frame we are trading at fresh lows. Let me draw that correctly. So you can see here we're threatening to trade at fresh lows, and if this is the case with this move to fresh lows on the monthly RSI, the indication is there that chances are very easily this one could go into a major bear market after a nice run over the last couple of years. So that's the risk, and also the fact that the MACDs could very easily drop to 3-year lows. So that's what I'm watching for as far as the South African market is concerned. The fact that the monthly RSI could very easily move to 3-year lows would suggest that this could turn into a major bear market. But as we just discussed on the weekly, there's some evidence of strength, and as long as this weekly chart is holding, then there's hope that this market could recover. So bounce and support is good. A break of that line, and also the monthly looking like they could be moving to fresh 3-year lows, could set up for a severe drop. Eric Mwathe, Mwathe.com. Mixed picture as always, because we're covering many markets across the globe. Otherwise, based on your market analysis, you can see which way you'd like to play for where the odds could be lying. Good luck, peace, and blessings. ERCS. I am out.